And we're back. You're listening to the Exitology Unlock Your Profits, Unlock Your Potential show on the number one global business talk and news network on the internet, IBGR, International Business Growth Radio. And ladies and gentlemen, I am joined here today by Jordan Burg and David Blauzen. Sorry, David, from CSG Partners. And we are talking ESOPs. And so David, a little while ago, we were talking about the benefits of ESOPs going forward, but maybe before we go any further, can you take us through the history of how did the ESOP coming to being, and just what have we seen over the last few decades as far as the creation of the ESOP and the types of outcomes that have been able to be created for both the owners who are looking for an exit, but also the employees and really the entire ecosystem, if you will.
Absolutely. So ESOPs go as far back as 1956, I believe, with Lewis Kelso, and ultimately really put into ERISA in 1974. It provides benefits to owners, to employees, and what I'll do is I'm going to let Jordan dive in a little bit deeper to the history as far as how they came about.
Awesome. And
Jordan, you're on mute.
Jordan, I think you're on mute, my friend.
Sometimes it's better that way.
There we go.
Kelso's this, great thinker, lawyer, economist. He's well plugged into Capitol Hill. He's well plugged into academia. We are obviously in a communist or an anti-communist moment in the country, certainly in the mid to late 50s. Mm-hmm. And this notion of the capitalist manifesto is, how are we going to beat back communism by creating worker wealth in a capitalist structure in the United States? What does that? Employee ownership. So it's not a handout. It's certainly earned opportunity, but it's earned opportunity with incentives that incentivize the business owner, the company, to create these opportunities for employees. And so Capitalist Manifesto gets published in 58, and to David's point, ERISA really enshrines the ESOP along with 401k and other employee benefits plans that we know and love in 1974. In those early years, though, people look at ESOPs as primarily just an employee benefits plan. We're going to move some equity into an ESOP plan. The equity is going to get parceled out to employees over time. When they leave the company, the fair market value of that equity, that of the shares that they've vested, they'll get the economic value of those shares. But I'd say in the last 20 plus years, 25 years, the paradigm has shifted a little bit. And the notion is, especially with what's called a leveraged ESOP, where we're selling shares to the employee trust, where the company is helping finance that transaction. And really facilitating the financing of that transaction either via seller notes and or in combination with third-party debt. And now the ESOP is kind of transformed from just a pure benefits plan to a real M&A transaction. We are selling stock. Owners are getting liquidity. The companies are getting the tax breaks. And this thing perpetuates. That's where and what's interesting is we're seeing more and more demand for this as we go. To your point, whether it's rising interest rates and people just not liking the deals or deals falling apart that they used to be seeing 24 months ago in the private equity landscape or the M&A landscape, people just wanting to make a small transaction, maybe sell 30% of their company to start. And the fact that an ESOP we can line up financing to sell that 30% for all of, and also just, I know, there is a lot going back and forth right now on social responsibility. It's kind of in the zeitgeist in that conversation, but the ESOP is absolutely, responsive to employee needs. And for people that have a big heart in this and really, really care about their employees, this becomes a game changer for them.
Well, I think this is just fascinating. First of all, I had no idea that the actual roots of the ESOP were part of this idea of the capitalist manifesto and the idea of really giving earned opportunity, as you said, right? Let's give the people who are creating the value another seat at the table, right? Which I think is just a beautiful thing. And, we talk about this here at Exotology all the time about what does legacy look like? What does multi-generational wealth creation look like? What does actual value creation look like, right? And so going back, knowing that there was an intention around that back when this concept was created, and then to see it formalized over the years and then innovated on, I'd be very curious. I'm gonna throw you guys sort of a hot seat question for a second. Let's say that you have a business that's about 20 years old, okay, and the business has been profitable year over year for the last 10 or so, and that business was capitalized by angel investors who are looking to get out. And we know for a fact that whatever the amount the angel investors have valued the business at is, say, up here. And we know that the business could, as of today, only, they can't afford their own buyout, basically, is what I'm saying. So if you were to be creative with an ESOP over a period of time to get the original investors out at their proper valuation, and then bring in the ESOP concept to do perhaps a leveraged ESOP or something of that nature, how would you workshop that situation using all the tools at your disposal?
Absolutely. And let's talk about how an ESOP is valued, right? When you're selling to a third party, if we think about the two main types of buyers, you have a financial buyer and a strategic buyer. An ESOP can pay what a financial buyer can pay. So if you have private equity offers, for example, at 7-8 times multiples of your EBITDA, that helps establish fair market value for what an ESOP can pay.
Okay.
And you can receive the same value that you can from a different third party, and ultimately receive that value usually anywhere from 50 to 60% cash at close. There's usually a seller financing component that's also a part of that. But let's say you want to receive a larger bite at the apple than even what the market is offering. You can sell to an ESOP in stages. So if you sell, for example, 30% of your company to an ESOP at a 7 times EBITDA multiple, and the next 5 years, you know that you can grow the bottom line of your company, well, you can sell another chunk to the ESOP 5 years down the line, receive a similar level of exit multiple depending on market conditions, and take second and third bites at the apple over time.
So, David, but you've worked with companies though where an ESOP is used to strategically buy out individual shareholders, individual investors, right? What does that look like?
Absolutely. Everybody does not have to sell pro rata when you're doing an ESOP sale. You may have one owner who's a part of your company that just wants out, and maybe they're a 30% owner of the equity share. And when you're doing a 30% or 49% or 100% sale to an ESOP, people can participate in the sale however they would like. So maybe one person sells on day one, and then the rest of the owners sell in the future. You can really tailor the transaction to meet all of the objectives of the various owners who are a part of the company.
So this is really interesting to me, because part of what I just heard there was, since it is employee focused, you can really go and figure out who your core team is, and then have that discussion with them of how do you want to participate in this company over the next year, the next 5 years, the next 10 years, perhaps the rest of your life. And then from that clarity in that discussion, and then from your understanding of perhaps how the culture needs to go, and perhaps how the financial transaction needs to go, you can really massage or create this in a lot of different ways to serve all of the different parties. Am I hearing that correctly, David?
Absolutely. And two of the other benefits that we should talk about with an ESOP is that an ESOP is non-discriminatory. All employees from day one participate in the allocation of shares within the ESOP. It's based on your proportion of payroll and as an individual employee to the total payroll of the company. So if I'm an employee with a $50,000 W-2 salary, and Jason, you're an employee with a $100,000 W-2 salary, you would receive 2 times as many shares within the ESOP each year. Now,
I see.
many times you have a key management team that you want to reward above and beyond the typical allocation of shares within the ESOP. And there are ways to structure in different types of phantom equity, maybe stock appreciation rights or warrants, to help get more equity into the hands of your key managers so
Okay.
that they can be further incentivized to grow the company and ultimately benefit from the growth of the company at a later time.
So all of this is really awesome, and I love the flexibility and the different. It feels like almost like a Swiss Army knife of how do we create alignment with all parties. One question that I have, and I'm sure a lot of people have, is how are you going to actually fund this, right? If I need to get 30% of the equity, paid back to the original investors or something like that, what are my funding options for this type of stuff?
We have some clients that no matter how well their company is performing, they don't want $1 of debt on the company's books.
Okay.
And ESOP is essentially a leveraged buyout of your own company.
Yep.
So maybe it's a cash flow loan, maybe it's an asset-based loan. But going back to my original point, sometimes you can seller finance the entire transaction. If your company is worth $100 million, you can take on a seller note for $100 million. Now, on average, we're usually raising anywhere from 50 to 60% of the sale amount for cash at close. And now, who do we raise that money from? Usually senior lenders. Maybe it's some sort of unitranche facility or mezz facility on top of that if you want to bring the leverage up a little bit higher. But we're working with dozens of banks, regional banks, large banks, community banks throughout the United States that fund ESOP transactions. Ultimately, you pay down that debt with pre-tax dollars, and you pay down your seller financing component of a deal with those cash flows as well.
That's awesome. Thank you for sharing all of that. Give us a quick where do we go and find more about your firm and taking the first step with you guys?
Yeah, I mean, we're at csgpartners.com. You can also find us on LinkedIn easily. And really, we're content driven, so you'll learn plenty there.
Beautiful. We will be back after this short 2-minute break. You're listening to the Exotology Unlock Your Profits, Unlock Your Potential show on International Business Growth Radio.